Shares of SoFi had a nice day on Tuesday, up 6.6 as I'm recording. It's near the end of the trading day, and what's the reason for this big move? Well, this is the rumor, and this is the article that really set this off. The Trump administration is considering selling some of their student loan assets. There's a $1.6 trillion portfolio to the private markets. Who would be the buyers there? Well, SoFi has a huge market share in the student loan refinancing business. This is a business that most investors, most banks really just don't want to get involved in. This is what I called part of the Trojan horse strategy for SoFi, getting into businesses that don't have a lot of competition because the economics are not particularly positive. But that means they have a huge market share in a potentially multi-trillion-dollar market if the government does decide to sell some of these loans. Now, what's key here is that this is not a done deal. The talks are early on, but they would like to shrink the size of the government's balance sheet and expand student lending in the private markets. Now, there are challenges here. The government, if the government is the co-party, then the government can do lots of things to actually get repaid. Remember, you can't extinguish these student loans in bankruptcy. So the government can do things like garnishing tax returns or Social Security benefits, things that private lenders like SoFi can't do. That doesn't mean this isn't an attractive market, but it means that the economics are potentially different if the government is holding a loan versus a company like SoFi. But where does this fit in SoFi's business? And this is where I think things could get really interesting, because the way that SoFi has structured itself recently, it's actually selling off most of the risk. And that's something that they could do even with these refinancings. If they do acquire these loans at scale and then help people refinance, that could potentially create an opportunity and a long-term relationship with those customers. That's where the value comes in. That's why shares are up as much as they are in trading on Tuesday. So let's dig into it. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So here's a look at SoFi's overall business, $32 billion market cap as I'm recording. Price to earnings multiple, even on a forward basis, is about 62. So this is a stock that's getting pretty expensive, and the price to book value, 4.3. Now that makes a little bit more sense as they move to offloading a lot of the risk that's on their balance sheet. But where does this fit into their financials? And the first area that student loans are going to fit into their financials is in the lending segment. This is the loans that are actually held on the balance sheet by SoFi. So $1.7 billion in revenue over the past year, and the contribution profit is a little under $1 billion. So pretty good business, pretty big business, but this is where SoFi actually has to manage the risk. So you have things like interest rate risk, you have duration risk if people pay off those loans early. And of course, there's default risk if people don't actually pay you back. These are all things that you have to consider, particularly in the personal loan market. Student loans are a little bit different, but this is why SoFi has an opportunity if they do participate in buying some of these loans and start to build that relationship with users. The other way that they're going to make money is through their financial business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, financial services has been a very fast growing business, over 100% growth in a few quarters over the past year. And the reason that it's growing as much as it is this is a business that doesn't require a lot of capital. So it's things like the fees that they get from credit cards, but it's also when they make a loan from their loan platform business, then they're going to collect a fee. That fee is going to end up in this financial services segment. That's why you're seeing these margins just explode, nearly a 50% contribution margin on the revenue that they've had from financial services over the past year. So if they decide to buy loans, refinance, and then sell off some of that loan to investors, then the fee that they get for that is going to end up in this segment here. So that's the real opportunity for SoFi. You could potentially have a fairly high margin business, and then you could have a business where you're going to be refinancing, repackaging people to get them to adopt more products, build a longer term relationship with you. Maybe it starts with student loans, then it moves into a checking account or savings account, then a brokerage account. They're moving into things like cryptocurrency. There's a lot of opportunities for SoFi to grow if the Trump administration does decide to sell some of this $1.6 trillion worth of student loan debt, and if SoFi becomes one of the buyers. Now, it's not 100% clear that they would be one of the buyers, but they are one of the logical banks to participate in a sale like that. So something to keep an eye on. Something that obviously management is going to be asked about in their next conference call. We don't know that this is a done deal, but that's why shares are moving higher today. That's how it could impact the company's business. Now, shares have run so far over the past year or so that this is actually a stock that I own considering trimming a little bit because shares are a little bit hot and it seems like a lot of growth is really priced in for SoFi, but they have lived up to those growth expectations. So let me know what you think about SoFi stock in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.